What's up, everybody? So my name is Rod Baker. I'm one of three hosts of the West Side Meetup. I am an active investor investing out in the Midwest still while working a W-2. Um, we also have the Real Estate in the Park, which we host once a month. Later on, I will introduce our other co-hosts, but first I would like to go over some housekeeping rules, and I want to thank everybody first because time is your greatest asset. And I want to thank you guys all for joining us this evening. First, this meeting will be recorded and posted online if you wanted to watch it again, miss something, or if you just wanted to share it with your friends and family. Second, I'd like to ask everyone to please mute your mics and minimize distractions for our speakers. And for everyone else that wants to ask a question or talk. Third, if you have any questions, please post them in the chat and we'll answer them during the Q&A portion of this presentation. And lastly, please stick around at the end of this presentation. We're going to go into breakout rooms to do some networking. And disclaimer, everything discussed during this presentation is information only. And then, sorry, I would like to introduce the next co-host, Brandon Rabe.
Yeah, hey, what's going on, everybody? Thanks for that, Rod. Welcome to West Side Meetup. I'm excited for tonight's presentation because just a topic super powerful. And our guest, he's even more interesting and important. So I'm excited for tonight. If you folks don't already know, my name is Brandon Rabe. I am a full-time investor in residential real estate. I'm also one of the advisors with WNN Properties and a online trainer with REI Charge. Along with Rod, we have Cedric here tonight and Gil, who's not with us today, but I co-host this virtual meetup with them along with the in-person meetup, Real Estate at the Park, the one that Rod was mentioning earlier. If you guys aren't already on our email list, that's one way that we let people know of all the events happening, along with our social medias. So just make sure you follow us on social media, our personal Instagrams, and then we also have a Facebook group. The link is in the chat. You can go ahead and join the group there. Like I mentioned, we have one more co-host here with us, and it's Mr. Cedric. So really quick, I want to bring on Cedric to share more about yourself. So Cedric, what's up, man?
How you guys doing? What do you want to know? I'm a Sagittarius. I like long walks on the beach. I'm married with 2 children, and I like investing. I really do like investing. It's good fun for me. A little bit of a nerd. I'm the guy at Christmas and the weddings. They're like, oh, here he comes. He's gonna talk about real estate. So that's me in a nutshell. But otherwise, I'm gonna throw it back to you, Brandon.
Awesome. So tonight we will be talking about infinite banking, and me, Rod, Gil, Cedric, we do this meetup absolutely for free, no cost to you. We like to bring in people like Jay, who are very knowledgeable and skilled in certain aspects of investing in real estate. And we have one ask, and the only ask that is if you guys find any value from tonight, if Cedric makes you laugh, if you get a perspective shift from Jay, if you find any value at all, we just ask that you take a screenshot of the meetup, post it to social media, tag everybody as much as you can, and invite other people to the meetup. We want to grow this community. We want to make this a great place for people to come and network, learn, just grow together. So that's the fee. That's our ask. If you find any value, please go ahead and share this meetup with somebody else and invite them to the next one, which is happening at the last Wednesday in September. So without further ado, I do want to bring on our guest today. His name is Jay Kahee. Like I said, awesome, amazing guy. He has a whole ton of titles and does a lot of cool things. He also works in serves his own community, which, I don't want to share too much about what he does, but I will leave that up to him. So without further ado, I do want to bring on Jay. Welcome to Westside Meetup.
All right. Aloha. Hey, mahalo, guys. I've attended this a couple of times and just got immense value. And I'm glad that I'm and honored that I'm having a chance to share now. So my name is Jay Kahee, born and raised in Hilo, local boy. I am a full-time firefighter paramedic here on the Big Island, and helping people is literally my passion. So just some circumstances in me growing up, I made it my life's mission to become an asset for my community. And I found one of the biggest, most glaring problems is around the idea of finances, how we are not in control of our finances. And so I help people take control. And being in the fire department, I come across a lot of really morbid, real life situations. And what I come to find is how frail we are as human, and what happens when we disappear from this world. And so after about 8 years of running on the paramedic, I was able to go to one call, and it really put things in perspective to me to think what would happen to my family if something happened to me. And then from there, I did what every local boy does. I tried to do stocks, I tried to do crypto, I tried to do all of this stuff to make sure that my family is taken care of if something were to happen to me, especially with all the risk that my job comes with. And so what I realized was they would still be in that same position with all of those avenues that I discovered. And then I got into life insurance, and then I started to look into different types of life insurance. And as I was learning, I was kind of not expecting to get into this industry, kind of not expecting to learn everything I did. And the biggest thing that I learned was about infinite banking and how it uses life insurance to not just be something which what everybody thinks life insurance is money for when you die, but how to use life insurance while you're alive to generate wealth, to secure your assets, to optimize your investments, to do such amazing things. And for example, how big this can get. This year, we're celebrating the 100th year of Disneyland. Disneyland was started by infinite banking policies. Walt Disney tried to get loans from the bank. Banks shut him down because they thought he was trying to open up some kind of sideshow circus talking about creative creatures and a fun park. And they turned him down because it wasn't good business. He used his infinite banking policies to start his dream of Disney World and Disneyland, and look what it turned into. And there's countless other examples of how people have used infinite banking to just scale, man, to just go big, right? But it's just an option. Infinite banking allows us to use whole life insurance as a financial instrument. And I'm just going to take you through some of the information, break down infinite banking for you a little bit, what it contains, and give you an example of how it can help you. So let me see if I can. What is it? Well, it's a safe place to store your money. Banks are, and we know we had some banks shut down recently, right? Because they actually aren't as safe as they appear. Because they participate in fractional reserve lending, a bank really has only about 6 to 10 max percent of all the money, people who have their money in that bank. If there ever was a bank run, the bank would go bankrupt. And that's what happened to these last banks. Life insurance companies at any time have 100% of the money to pay out to every single one of their clients should they all die at the same time, which would never happen. But that shows you how financially secure life insurance companies are. They're also backed up by the FDIC, just like the banks and everything, but way more financially stable. It's a safe place to grow your money. In these certain types of policies, there is no risk. Your money grows and compounds for you every single day, every year for the rest of your life from the day you start your policy. It's a highly leverageable asset. And I'm gonna go over this. You can use this for literally whatever you want. This one here, I put it at the top because it's the most important thing for me. It's much needed protection for your ohana. Now, despite using it as a financial instrument and everything that you can do there, to take care of your family is really what we're doing this all for, right? What we're investing in real estate, creating this legacy, having these assets so that we can provide for our families. And that's exactly what this does. It is a legal tax shelter, just like real estate, right? Now, when you start compiling all of these different assets, man, you start to really create some mana for yourself in your business and your life. And this is the actual product we use. It's a high cash value, dividend earning whole life insurance. And that makes a big difference. Now, what it's not an investment. Although I like to challenge this, anything that earns money can be considered an investment, but anything that improves your life by you putting in some time of time, effort, money, and improves your life, I consider an investment. So technically it's not an investment because there is no risk, but I consider it an investment. Now, your money is not in the market. Your cash value in your policy is not in the market. So at no time is your money at risk. You will never lose a cent from establishing an infinite banking policy. It's not controlled by the government. Every investment vehicle you can think of, the government has its hands in. And every time that happens, you're subject to taxes, to fees, all of these things that can really take away from your money. And we kind of bypass all of that. In fact, the government supports infinite banking. It's not death insurance. Yes, your family gets money when you die, but as I mentioned, it's more about using the value of infinite banking as a financial instrument while you're alive. It's not a term, an IUL, or a universal life policy. You'll probably pull up some videos where you hear people talking about an IUL and using it for infinite banking. While technically you can use it, there are no guarantees in an IUL, and your money does not grow the same, which doesn't make it as efficient as a modern whole life policy. And most importantly, it's not completely understood by most. People don't know, and there's no real secrets of the wealthy. It's just stuff we didn't know. I want you guys to think about before you got into real estate investing. You didn't know about it. It wasn't a secret. It's just you hadn't taken the time and the effort to go and learn about it. So that's what I do. I just teach people about it. Now, there's 4 main parts to every whole life policy. There's the growth. There's 2 separate internal revenue codes. And this is what I mean by the government supports infinite banking. And then, of course, there is the death benefit, which we call instant estate. Now, when it comes to the growth, it's guaranteed. And as I mentioned, it's you experience no losses because your money's not in the market. Here on the left is what we see your money does in the market. And while it is trending upward over time, those little parts where it goes down, every single time it goes down, and it does this dozens of times a day, you lose money. I want to give you guys an example. If you have $100 in an account and in day 1, you lose 50%, the market goes down 50%, you now have $50 in that account. Well, if the next day the market corrects itself and goes up 50% again, the market broke even, but you only have $75 in your account. Now, if you take an average of the returns, -50 day 1, +50 day 2, divide that by 2 days, you have a positive 25%. Oh, I'm sorry, you have a 0% average return. But what happened is your account lost 25%. So average returns mean nothing because you don't account for the losses that you experience on a day-to-day. On the right there is what you experience in an infinite banking policy. Every year, you have more than the last, guaranteed. First internal revenue code takes advantage of something that you guys know very well, which is the loan provision. With what this basically means is loans do not count as income. I bet you guys didn't know that that was an actual internal revenue code. But when you get a loan from a bank for a lot, a property, a deal, you don't pay taxes because it's not counted as income. So they allow us to use this to access our cash value tax-free to do whatever we want with it. And of course, there's many different things you can do with it. The second internal revenue code, and this is a big one for me, is living benefits and disability income. So what this means is that they will give you a portion of your death benefit while you're alive. So if you get sick, but you don't die, right? Normally life insurance doesn't pay out if you don't die, but if you stay alive and you get sick, you will get a portion of your death benefit. So say you have $1 million policy, you will get a percentage of whatever that number is. And the triggering events are certain specified medical conditions, which is critical, chronic, terminal illness. For critical, most likely you'll get 10%. And these are heart attacks, strokes. That's what the life insurance companies are able to forward you. And this is tax-free, payback free, doesn't count as income. You don't claim it on your taxes. You can use it to pay medical bills or whatever you want. Chronic illnesses is like COPD, diabetes, dialysis. You'll get up to 40% or $400,000 of that $1 million. Same thing, tax-free, payback-free, doesn't count as income. And then terminal illness, cancer, and all these other terminal illnesses, you'll get up to 60%. So $600,000 of your death benefit will be forwarded to you while you're alive to take care of your debt, your medical bills, or just live your life till it comes to an end. Now, another thing that this does, it doubles as long-term care. There's a good portion of us on this call who are going to end up in a care home. right? So now this terminal illness benefit, that's 60%, can actually go towards paying your long-term care in some kind of care home facility, because those are super pricey. And then the last part is the instant estate or the death benefit. Now, this is the actual life insurance. And this is how we normally come up with the number of how much insurance you should need, right? How much debt you have, your income replacement, because most families operate on 2 income homes. And if one disappears, then your family's left high and dry. But these are just some, but of course, everybody's different when they start to set up their policy. So credit for life, or the growth, is in the indexing, the cash for life, the first internal revenue code, the care for life, the second internal revenue code, and then coverage for life, which is the instant estate. This is a whole life policy. So this lasts your entire life, right? You won't outlive these policies. So infinite banking. We all do whatever we do for security for our family. This is important. As I mentioned, we all have incomes, and families survive on 2 income homes. Say you make $50,000 a year for 30 years. You are a $1.5 million asset for your family. Now, what happens if you disappear at any point throughout those 30 years? Well, with an infinite banking policy, your ohana will be okay, because you have coverage to replace that income. And security is a big thing for me. This is the main reason why I do life insurance, is to secure people and their families and their children. But everything else is just gravy to me, right? Growth, again, guaranteed. It never stops. You never lose. And it's better than the bank. Well, what kind of growth? Well, people like to focus on the return and the growth, but that's really not the true benefit of infinite banking. It's actually being able to leverage that money over and over again, tax-free. But you do have guaranteed internal rate of return of about 3 to 4% in most life insurance companies. But then each whole life policy also receives dividends, and the dividends, not every company pays dividends. And the companies that my company works with, we deal with companies that have been paying out dividends for over 100 years, every single year, through world wars, through global pandemics, through market crashes. Their finances is separate from the stock market and real estate, so they don't get affected like the other industries do. So they've been paying out dividends. Well, if you add the internal rate of return and the dividends, you can get up to 8 or 10% growth year after year, compounding for the rest of your life. Liquidity. This is your money, your cash value. You're putting that money in. There's no credit check. There's no business plan. There's no questions, and you can use it for anything. This is a highly liquid asset. Sometimes, even in real estate, if you want to get money out, you have to go through a refinance. If you don't have a HELOC, you got to go through a whole loan process, which could take longer than you want. Well, you can get your money fairly quickly. And I'll go back to this at the end of the presentation. Legacy. I looked up the definition of legacy. It's an amount of money left to someone, or a long-lasting impact. Well, there's many ways that you can create a legacy from having an infinite banking policy. Like, what is the last thing you want your family to remember about you? Or what is one thing that you would like them to remember? Well, my dad took care of me even after he was gone. That's something that I want for my family, right? I'll come back to this one as well with some strategy. And then leverage, the possibility of using a loan to access capital while continuing compounding interest and not paying taxes. That is huge. Every other investment, even including your savings account, when you take money out of your account, you aren't earning interest anymore. Well, in your life insurance, whether you use that cash value or not, it will never stop compounding for you. And I'm talking about the entire amount of your cash value. That is leverage. Well, another thing is it does not diminish your borrowing capacity. Because this has nothing to do with any bank, you can still leverage the bank. You can use your money from your policy and the bank to create this, whatever you need for the deals that you do in your business, right? Well, there's other types of leverage, and I'm just going to touch on one. But this is an actual example. I just went through some numbers, right? Say you have a piece of land that you want to obtain out in Ainaloa. Say it's $50,000, right? Well, you have a lot of options, right? You can do 20% down, or you can do 100%. And of course, you guys probably know more about this than me, but these are just a couple of the options. Now, you can do private money lending, you can call Kiko Capital, you can do all of these different creative financing options. Well, if you had infinite banking policy, and let's say you had $100,000 of cash value, well, you've got one more option. So if you took the 20% or you paid the 20%, you put 10,000 down. When you take a loan from your cash value, most insurance companies will charge you a 5% simple interest for a 12-month period. So 5%. So that looks like 500 a year for this loan, which is not that much, right? And now you have the land. The 100%, you can take out the 50 from that. And what's the downside of that? Well, the bank is not paying you the 0.03% that they're paying you with your money in the bank. But the true cost is the lost opportunity, because now that 40,000 could have been used to purchase another land or start your drafting and permit process. You get the deal for that land, like build on the land. That's just an opportunity. Now, this, as I mentioned, is the benefit that you earn interest on the entire 100,000, whether you took out the 10,000 or the 50,000 or all 100,000. If you borrow all of that 100,000, it still grows for you in your life insurance policy. I'm going to tell you why, because when you take a loan from your cash value, you're not actually taking out your money. What you're doing is you're taking a loan from the company and they leave your money in your policy. And this is why it continues to grow despite taking out the exact amount of value that you have in that policy to do anything that you want. So for this, that's 6% is the low end. As I mentioned, it goes up to 10% or so. 6%, $6,000. Over the course of this 12 months, you paid $500 if you took the $10,000 option, but you made $6,000 of growth in the policy. Now, if you do a deal that turns around in a matter of 8-9 months, you're not going to pay the whole 5%. You just increase your cash on cash return, your return on, income, or whatever all the terminology you guys use for improving and compounding your growth on the money that you invested. This is one way to leave the bank out and to now you become a bank of yourself, right? A lot of things that, like for my wife and I, we have a HELOC on our home, and we use that to invest in certain things. And that is a form of equity, which you guys are all familiar with. Well, infinite banking quite simply is equity on you, right? It's on you. Not everybody has a home to pull equity out of, but you can build equity on yourself, right? And why do banks make so much money? Well, banks are in control. When you go to the bank to take out these loans, they control you. Unless you are a master of the art of negotiation, you can talk down the terms, you can do different things. But most of us go to the bank and we just take what they got, right? Well, as your own bank, you get to decide how much money you want to lend, to who you want to lend it, which likely would be yourself, and at what interest rate. When you're the bank, that gives you control, right? This is another form of leverage, future investors. So now one thing that I'm working with a couple of real estate agents is when they sell a home, they refer them to me and I get them an infinite banking policy going. It protects that family for the cost of that mortgage, because now mortgages are getting higher and higher. And if something happens to one of those parents, then they lose the home because it's so much. Well, we protect the parents. They will get a payout should something happen to the other one, which means the home stays in the family. But with an infinite banking policy, this has been the average. I've been helping clients pay off all their debt. Now, not just their home, credit cards, cars, personal loans, student loans, and their mortgage in 10 years or less without paying any more than they're already paying. And you say, how do you do that? Well, most people say you have a credit card debt, you have a mortgage, you have a car loan. Most people like to pay a little extra to try and get their debt down a little faster. So if you have a $2,100 mortgage loan, some people might pay $2,500. If you have a $250 credit card bill, some people might pay $500. Well, all of that extra that they pay, instead of the lost opportunity of earning on that money, we say, hey, just pay your minimums and use that extra to create your policy. Now, I've had clients that had over $1,000 a month of extra payments, that now they're putting $1,000 a month into their infinite banking policy, and they're blasting through their mortgage in 7 years or so, saving them close to $200,000 of interest. Now, if you can refer the people that you sell your homes to or whatever it is, and you can help them get out of debt in a third the time or less than a third the time, and their family is protected, now you can really go back and talk to them and say, hey, look, I talked to them about your opportunity to invest with you, right? However you guys do that. Now, you just built rapport in yourself. You're really looking out for the client, and you can leverage that relationship to now have them turn around and come back to you. And now you have another lender in your pocket, right? So this is what your client would get, right? If they have debt. This is what I do. I go through a policy. I do the illustration. We go through, we agree. They get their whole policy completed, and I show them exactly how long they'll be out of debt and exactly how much interest that they'll be saving. Now, this is a 4-page report. This is just the front page, but they would get an exact year, month, day that they pay off each and every debt from their policy till the last day that they are out of debt. This right here, I've helped a number of families here in Hawaii get out of debt, and a lot of them are doing really well. I'm using this for myself as well, in fact. So frequently asked questions. These are some of them, right? So how long does it take to set up? Well, depending on your health and intention, 2 weeks to 2 months. What do I mean by that? The healthier you are, the younger you are, the underwriting takes a shorter amount of time. And your intention. If we go through this and I give you the application to fill out, and you take a week, you take 3 weeks to fill out your application, well, then that just makes the process last longer. But if we fill out that application, I submit it that same day, you could get your underwriting done in a week, right? Also, you have a medical evaluation that you'd have to complete. Depending on when you can schedule that around your timeline in your work week, then that would deter, that's part of the underwriting as well. Second, how long till I can use my money? Well, once you make a deposit, 11 days after it's available for a loan. And then if you have your money in your policy and you put in a loan request, 2 to 4 working days. My wife and I just took out close to $28,000 over the past month and a half. And in each instant, it was about 4 days. One was 3 days, right? How do I fund an infinite banking policy? There's really many different ways to fund your infinite banking policy. Now, one thing I just want to say is that pre-tax money and post-tax money, strategies is different. Like, this is a post-tax financial instrument. So things like IRAs and 401ks, you can't fund your policy with those type of retirement plans unless you cash it out, pay the penalty and the taxes, and then put that money into your policy. What I like to do is find money sitting around in a bank, right? Because now you're doing something better for the client than keeping it in the bank. So moving on, who can get these types of policies? Anyone healthy enough from 1 month to 70 years old. And 1 month is as soon as you get your social security number, or your kid gets their social security number, you can set these policies up. And that is truly the best time to set up a policy, is for your kid. The younger they are, the better, because the cost of insurance is so much cheaper. The older you get, the more insurance costs, because part of it is they're paying you to die, right? You're more risky. And then what other strategies are there? Well, there's a tax account. So this is what I was talking about, having money sitting around. So, not a lot. There are a number of people that I deal with who have their own businesses, and they put 10, 15, one of them puts 20% on the side in a tax account for the end of the year, come tax time. They'll do their deductions and hopefully they pay less than that. Well, I say, let's take that money and put it into an infinite banking policy, because now that same money that you're about to just give away to the government is now growing for you for the rest of your life and providing your family the much needed protection, right? So money sitting around. That a tax-free retirement is another one. Some people just want to grow money so that they can use in their retirement. Well, with this, as long as you got that cash value, you can use it as much times as you want throughout your life. But in retirement, you can take withdrawals, and you can also take loans tax-free that can help supplement your lifestyle in retirement. Investment optimization. And this is just everything I talked about. When you borrow money from your policy, it's still growing inside your policy, as well as whatever rate of return you get by, in the deal or whatever investment you're doing. So now you have an internal rate of return, and you can create multiple external rate of returns, which is true leverage, right? College planning, you can basically start a policy on your kid, while they're young, put $200-300 a month, and that money grows. By the time they're 19 years old, they got 40,000 or so that they can go to college. You can also get policies on yourself, which is what my wife and I do. We have a policy each. We put in 20,000 a year. So by the time our daughter, who's now going to be 16 in November, she's a junior, so she's a senior next year, she'll be off to college. Well, by then we would have had 5 years. We would have had over $100,000 in each of our accounts. And now our daughter can literally go to any college she wants. But because we started later, we have to put in more money up front. But if we started earlier, when our kids were younger, we wouldn't have to put in so much, and we could still achieve the same or even greater results. Asset protection. This is one that I'm working with a couple of real estate investors who have rentals. So they would get you can get multiple policies on yourself. So they would take whatever overage there is from the rent that doesn't go to the mortgage, and they would use that to start their policy, whatever the overflow is. Now, what is that money doing? Well, it's growing for them. They're earmarked that policy for this home. So now down the line, when that home needs a new heater, when it needs a new roof, now they have a store of money to withdraw from so that they can fix that house for whatever they need. They want to sell it and they want to repaint it. They want to do everything. You now have a store of money that you can access without having to dip into your personal funds or money from another investment, which that money you can also use for other investments at the same time as well. So there's many different things. And then for your children, which is what I mentioned. Now, I'm moving kind of fast, but I do want to open it up right now. So if any of you guys, please feel free to unmute. If you have questions that you were wanting to ask about infinite banking, you heard something, you'd like some clarification. I mean, there's tons of information. I just tried to kind of touch on some things, but please unmute and feel free to ask your questions. Let me check the chat.
Yeah, Jay, it looks like early on, Tani asked a question. She asked, does age hinder the money you can leverage? I know that was in the very beginning. Do you know what she's trying to ask?
Yes, age does not hinder the money you can leverage. You can, once you have that cash value, then it's open for you. It doesn't matter what your age is. The older you are, insurance costs more. So say you have a $5,000 a year premium that you pay. Out of that 5,000, maybe if you're younger, maybe 900 of that goes for the cost of insurance, and the rest goes into your cash value. So now if you get older, that cost of insurance now goes up, right? The older you get. So you might actually pay 1,500 for the cost of insurance just because you're older. So that's how age affects the amount you can leverage, but not if you have that money already, nothing really affects your ability to leverage that money.
Awesome.
Going down, Mike says HELOCs for the win. Love HELOCs. I actually use velocity banking as well as infinite banking. And in fact, I fund my policy with my lines of credit. So throughout the year, I take out chunks from my lines of credit and I put it in a savings account. And that's it. That's where I make that one big annual payment for my life insurance premium. So now I'm using other people's money to build my own bank, right? Jansen, can we put cash into the account? Absolutely. As a savings to borrow against later? Absolutely. Will that cash that we put build the same interest? It's going to build more because cash doesn't earn you money. But if you put it in the bank, you're getting, as I mentioned, 0.03, high interest, maybe 2%. If you get it locked away in a CD or something, 2-3%. Where in an infinite banking policy, you can get up to 8-10% and still have access to it to now leverage and create more returns. So it's really limitless on how much you can earn in the policy. Yes, you're limited, but now leveraging that to do other things that's the true leverageable point of this, right? Cedric, if I create a policy product for my kids, can I pull from it to invest? Yes, you can. Now, there are some restrictions as a parent. The only restriction as a parent is that your children can only get a total death benefit of half of whatever you get. In the past, people was insuring their kids and then killing them. It sounds crazy, but so they put that in place so that your kid is not more valuable than you are. But absolutely, anybody you have an insurable interest in, which means your kids, even your parents, if you take care of your parents, you have an insurable interest in them. you can put a policy on them. So now there's 3 people to every policy. There's the owner, there's the payer, and then there's the actual insured. So you can insure somebody that you have an insurable interest in, and you can be the owner and the payer. For our children, we have policies on our kids. When they reach 18, up until then, we're the owners and the payers. But when they reach 18, we're going to make them the owner, because now they can leverage the policy. Whoever is the owner has the ability to leverage the policy. So I want my kids to have the option to use that for whatever they want: new car, wedding fund, going to college, whatever it is. How do we pay back the loan we take out from the policy? Is there an interest rate and a time frame to pay back? I'm glad you asked that question. So most insurance company, when you pay the premium, it's taken out of your bank account via draft or wire, or however. They have that account online. So when you make a loan request, they just fund that money right back into your policy. So when you take out a loan, life insurance is the most flexible payback financial tool. Any way you can borrow money, life insurance has the most flexible terms, because you don't even need to pay back the policy. As I mentioned in that example, you take out a loan, you accrue $600 in interest or $500 in interest, but your policy earns you $6,000. You can use that earnings to pay out your interest. So you really don't need to, right? As you start to put money into your policy, not only does your cash value grow, your death benefit grows as well, and exponentially. And what I've seen about 5 or 6 times. So if you put 10,000 into your policy, it will add another 50 to 60,000 worth of death benefit at the end of your policy. So now if you take out a loan and you pass away, whatever that loan was, you will always have more that your family will receive, because that loan will just be subtracted from whatever the death benefit is at the end. So there's no time frame for the payback. But if we're using this as a financial instrument, the true leverage comes from when you increase that velocity of that money. You use it, you pay it back. You use it, you pay it back. That is where the leverage lies. Once you withdraw from your policy, yes, it will continue to grow, and over time you'll have more you can pull out. But if you put that money back in, you can access it right away again. And that first time you took it out, you made an investment, and that's earning a return for you. You can use that to pay back the policy. And now you can take another loan out. You can loan out as much as you want up until the maximum of the cash value that you have. I own about 4 million in IULs. My understanding that there's a waiting period before I can borrow against the cash value. My waiting period is about to be up in the next year and a half. I'm looking to leverage the cash value for future investments. How do I properly borrow against my policy? Is it a loan from a financial institution against my cash value, or do I take a loan directly from the insurance company? From the insurance company. And yes, IULs, which is another reason why they don't make the most efficient infinite banking policies, is yes, there's usually a penalty period, and depending on the company, it can be 10 years or it can be 2 years. But yes, there's a penalty period. If you take cash value out of it, then you will be penalized. But all you do is you would contact most life insurance companies. Once you get a policy, will send you an email to have you log into the back office, or you can always call your agent and they should be able to help you log into your back office. Once you log in, then you can access the loan application, and you can easily request the loan. You don't need your insurance agent to request a loan in most life insurance companies. And no, you don't take it from a financial institution. It's directly from the insurance company. What is the usual timing for withdrawal for use on renovation repairs? Usual timing for withdrawals, in my experience, was 2 to 4 days. Whatever you use it on, you can use it on whatever you want. So it doesn't matter what you're using on. They're not going to ask you. You put in the request, they give you your money. Is it still a smoking policy for kids? No, it's not a smoking policy. That actually got removed a year and a half ago. They would just quote as a smoking, but now they removed that. Yes, no, it's not smoking policy. How is the interest determined? That is an internal question for the for the life insurance companies. I can definitely look into that. Every company has their own thing, right? They do it on the financial stability of the company. They do it on their internal investments that they do. So whatever their return is, then they will guarantee an interest rate, and they'll also give dividends. So they take care of that. I'm going to take a couple more questions because I don't want to go too long because I know we got somebody else coming on. But if I have 2 whole life insurance policies already, can I close it and use it to open one big life insurance policy? Absolutely. Just like in real estate, you have a 1031 exchange. In life insurance, you have a 1035 exchange. So you would take that cash value and it would directly go to your new cash value, your new policy, right into the cash value. You won't lose a cent, just like transferring money from one bank to another. You cancel that policy. So now the premium you're paying to that policy can be used to now start the premium for the next policy. So yes, you can combine as much policies as you want to create one big life insurance policy. I would just have you make sure to take a look to see if that's the best decision for you, because when you got that policy, you were a whole lot younger, possibly. So that insurance is a whole lot cheaper. So if you start a new policy, especially if you're older and maybe have some medical conditions, that could be a lot more expensive. So it would be good to consider that when moving to a new policy. Can you explain what a MEC is and how it affects if overfunded? So a MEC is a modified endowment contract. So what that means is life insurance has limits. When you set it up, there are no limits. But after you set your policy, there is a limit to how much you can contribute to your policy. If you go over that limit, what happens is the policy itself loses all of the tax advantages. And now it's treated just like an investment product, just like an IRA, just like a 401k. So when you pull money out of it, you actually get taxed. So you don't want to do a MEC. You don't want your policy to MEC. You don't want to put more than you can put into that policy. If you have and you want to put more in, the normal procedure is you open another policy, or you open a policy on someone else who is younger, or maybe a female, or is cheaper than a male. Open another policy if you have more money that you want to put towards life insurance. How does disability affect the policy? So anything that will make you die quicker costs more money, right? So chronic injuries, they will determine that in underwriting, and most likely you will get rated a little higher and it will cost a little more to open a policy. You can roll over your 401ks as long as that gives you the option. So there's some investment accounts that take the taxes out immediately, right from when you withdraw it, and there's some that give you the money up front, and then on your tax return you have to claim that as income. If you are able to take that money out in its entirety, then you can put everything into your life insurance policy, have it grow for you, and then pay your taxes out of your policy. That's something I did for one of my clients. Kind of terms don't have cash value, so it can't be 1035. Anything, it's only what has cash value. What is the minimum max deposit to start a policy? There is no minimum max. You can put $100,000 in right now to fund a policy, and then have a monthly or yearly premium, or you can do just a single premium. So yes, there's no minimum maximum. But once you set that, that's going to be what it is moving forward. You can't put more than that per year afterwards. Yeah. Okay, I kind of ran through that as quick as I could. All right, I'm gonna close this and move on. This is how you can get in touch with me at Mwina Ali'i and Kala Between the Lines. Any of those pages on Instagram, you can get in touch with me. That's also my website. That QR code is to my link tree. There's a lot of links on there. At the top, I put a lot of Maui relief stuff just because I use the link tree for a lot of different things. But if you scroll down, you can find information on infinite banking. You can get to my website. You can get to my Calendly link. You can set an appointment. There's also videos you can watch on there. But yeah, what I want to do right now is I actually want to bring somebody up. It's somebody that you guys know who is using infinite banking for real estate investing. So this is huge because this is a testimonial. This is something that is working for him, and you guys are going to be able to see. You guys can see his success. So it is possible to use this to just compound whatever you're doing. So without further ado, Brother Fuzzy, are you on, Brad? Can you are you going to share your screen?
Yeah, what's up, gangy?
Yes, sir.
So yeah, believe it or not, I have 3 policies. One for myself, one for my wife, and one for my 8-year-old. And I'm gonna share my screen here. So can you guys see my screen?
It's sharing right now. And just to let you guys know, Fuzzy is not my client. right? He did this with somebody else, but it doesn't mean I can't help him. I
Yeah,
just wanna let
Disclaimer,
people,
disclaimer.
you know.
yeah, disclaimer. And again, like I like I don't sell this. I just met someone through a friend that, hey, have you ever heard of the sweep strategy, or have you ever heard of infinite banking? And I said no. And the lady who I met was through a friend, and her husband was a guy just like Jay, sharing his knowledge. He's a broker that taught me this infinite banking thing. And when he showed me the infinite banking, I was like, well, how come we didn't know or like was taught this, right? It's like, so because I'm in the real estate industry, I felt like I needed to jump on board. But because I got into trouble when I came home, I think with a record as a felony, right? I went to jail for, you guys kind of know my story if you don't know me. I went to jail for drugs and I came out, but I wanted to open my policy and I couldn't open it at first. So what happened was the broker told me I had to wait until 10 years, after my probation. So instead of me putting a policy, we opened up a policy with my wife. So I'm gonna click on my wife ones here. So this is the one that we did first. So I don't know if you can explain this stuff, because all I know is I just put money in every year. But then I put, like, as soon as I put the money in, I'm pulling it out. I pull out. So say you put in, so I can put in her account, I think like 10 or 14,000 a year, something like that. I not too sure, but I put whatever I can. So her current policy is what is that? 519. Jay, you can kind of help with
Yeah,
this.
so that 125,000, that is what the policy started out as. So your
Okay.
premium is based on 125,000, but every year that you put in all of that premium, what happens is your death benefit grows. So the number on the right, the 519 is your current death benefit. So your policy, however long you had this, went up by $400,000 almost, right? And I assume you have loans out on this because you should have way more cash value, but that is the cash value you have left after whatever loans you took out.
So yeah, I'm going to
That you
scroll
still
down
can
here.
loan.
I'm going to scroll down here. What is that? The premium. It says premium amount, and then shoot, let's go down here. It shows that I owe money on this one, but I'm going to pay it tonight. I have three policies I'm going to pay tonight. One of them I went past due, so current dividend. But I think my account is like I'm gaining compounding interest on all my accounts is like 5% variable. You see that on the bottom?
Oh no, but this is the loan. This is
Oh,
the
it's the
loan.
loan.
So this is what the loan
Okay,
costs you,
that's right.
5%. Yeah, yeah.
Right. So
Yeah.
what happened was we had about close to, I think, 100 grand of what they call that, face value, or money that was in the, how do you explain that? So I had like 100 grand in the I think it was 2 or 3 of our policies, and I pulled money out to purchase a fixer upper in Hilo, right? And that's why you see this loan, and I'm supposed to pay it back, but I never paid it back yet, but I will pay it back. So usually I think you pay yourself 5%. Yeah.
Yeah. So you had 100,000 in cash value over the 3 policies that you loaned to make that investment. Yeah.
Yeah. Okay. So this is my wife's one, and then I'm going to show you mine. Mine one is more, of course. Let's see here. But the whole reason why I'm doing this, or we're doing this, is because there's what is it? One of the reasons why, if say something happens to me, my family's covered. So this is Kyra, my daughter's one right here. So Kyra is 8 years old, right? So this is her whole life policy. And then mine one is that one. See? So if I die, she get that much, close to $1 million. That's one of the reasons why. And then the other reason why is I use this as my bank. So each time I put money into my account, and then there's different ways you can I can also add to my account too, right? To increase my policy and stuff like that. And this is a great way, and it's non-taxable. It's taxed before it goes in, right? And then once you pull it out, it's non-taxable, and you can become a lender that way. And that was the whole thing. I wanted to become a lender, but I ended up using the money to purchase a fixer-upper in Hilo. And once I sell the home, I'm gonna repay my policy, and then I'd be able to use these policies to be able to lend to you guys. So, it's been a blessing, been a wonderful, road. And I know, like, we wasn't taught this, and it's kind of hard to talk about life insurance, but I think Jay kind of explains it at a fifth grade level. And I think everyone who is interested in getting involved, I think they should talk to him, because I think it's worth having, even if it's for your kids. Like, if it's just for your kids too, because like we set up our daughter until she gets like 18 or 21, she'll have like what, $375,000 or something like that she can do whatever she wants. And we only pay $2,400 a year, so I'm doing it. I'm doing it.
Awesome. That's awesome, Fuzzy.
Yeah.
Awesome. So thank you, Jay. That was an awesome presentation. Learn plenty of the infinite banking. Definitely gonna hit you up in the future. I want to thank Fuzzy for sharing his personal information. So that's a definitely highlight. I would like to move on to the next segment. We're gonna do the investor spotlight. So what we like to do is we like to highlight some of the WNN mentees and what they do and what they are going to do in the future. So I'd like to bring on Jenna. Jenna, you ready?
Ready as I'll ever be.
All right. Well, the floor is all yours.
Hey guys, how's it going? I'm in my car, so don't mind me. Just finished my 8 to 6 job, and I come back on and I do my real estate investing. That's what I do. So I've been with WNN for a good year now, and I come up to the end of like my contract or whatever. But within that year, it was like worth the investment, right? Big chunk at first, but in hindsight, that's like pennies compared to what I know now. The experience and like the knowledge I've gained throughout the year, like for example, like paralysis, paralysis analysis. Yeah. I was doing that before the mentorship, and then when I joined the mentorship, it just, you got to take action, right? So taking action, it led me to like having, chances of getting under contract with housing and whatnot. So that was better than staying stagnant, I guess. But right now in my journey, just last week, I got like accepted like 3 contracts. I think that was the most ever action I got, which is super exciting. So right now I'm doing like the due diligence part, and I'm, just doing my end. So I'm not like going in like blind. And I have my mentor, that he's gonna be like, nah, not worth it, or like, yeah, go. Gil's pretty local, so he's chill.
Yep.
But besides that, I got those 3 contracts going on right now. Since my mentorship is up, I'm pretty much gonna keep continuing putting out offers, building my portfolio, and just keep taking action pretty much, you know. This is just the start. And I'm so like lucky and blessed to be like in this like WNN mentorship because it's like lifelong. They're gonna be with me like forever and ever. So sorry guys.
No, you're good.
But yeah, that's pretty much my journey right now.
Awesome. Where do you see yourself in the next 90 days, Jenna?
The next 90 days, oh man, the year's gonna end. Hopefully with my 2023 goal completed, which is 3 doors. Hint, these 3 doors I have right now. So
All right.
if anyone wants to like lend their money, get some money back on their, then let me know, hit me up.
There you go. There you go. Awesome. Thank you, Jenna. And congratulations on getting those 3 under contract, and good luck to you on the due diligence part. We know that you're gonna crush it. So awesome. Thank you. Thank you. And then thank you again, Jay, brother. Thank you, Jay, for the infinite banking, and thank you, Fuzzy, for sharing your personal life story on the infinite banking as well. Right now, so we're pretty much done with the formal presentation. Stay tuned though, because we are gonna go into breakout rooms where we're gonna do some of the networking. So I'll let Cedric come back on. He's gonna explain what we're gonna do with the breakout rooms.
Roger that. Thank you so much for hanging out, guys. We're going to break out to a smaller group. Sometimes when people come together, we're a little bit shy and scared about sharing our questions because we don't want to look stupid or anything like that. Well, we want to let you know that everyone is here to help you out in any which way we can. So when we break out to small rooms, hopefully you're a little less shy, and we want to talk about 3, 4 little questions. Who are you? What are you doing in real estate right now or in your investing world? What are you working on? Or what you need help in what you're working on. That's it. Just share a little bit, because I know the information is within the group, within the people. We could all help each other to get to the next step or knock down that domino that's in front of you. That all you need is a little bit of help, momentum, knock it down to get to the next and to the next. So thank you so much, Brother Jay. Thank you so much, Fuzzy, for sharing. That's awesome. And Jenna, great job. I think Brandon's going to hook us up and break us out to different groups, and let's see what we could learn together.
Good stuff. Yep. So I'll see everybody in about 25 minutes, and then we'll come back together here to wrap things up. So happy networking.